So the more the PBOC stimulates, the more the renminbi depreciates, which is deflationary or disinflationary for the global economy. So when you look at the PBOC's balance sheet, the PBOC's balance sheet used to be primarily driven by foreign exchange reserves. China's has a mostly closed capital account, and for most of this, that yellow line I just drew, it was pretty much it was all closed. And so the reality is, when Chinese exporters sold something abroad and they got dollars or whatever, most trade happens in dollars. They got dollars. Those dollars had to get converted to renminbi to enter the Chinese economy as earnings. And so the PBOC created renminbi, so the renminbi in exchange for those dollars, and that's why those dollars wound up on the PBOC's balance sheet. And so those renminbi that were created in that process became liabilities of China's commercial banking sector. The liabilities of China's commercial banking sector were levered up and turned into assets of the China's commercial banking sector in the form of a property bubble that is now currently unwinding. And so that game kind of stopped when the dollar broke out in 2013, 2014, because the renminbi had a loose managed peg to it. So the dollar's breakout was driving up China's real effective exchange rate so high that the kind of export growth oriented, the export oriented growth rate of the liabilities of China's commercial banking sector really started to slow in a material way. And that's why you start to see this divergence emerge between China's foreign exchange reserves and the PBOC's total assets on their balance sheet. Now that divergence, the reason that's a divergence there is because the China Inc., the folks who export in China, no longer repatriate the kind of money that they do. That's why you have persistent capital outflows in China, that those are just retained earnings. They can't actually get money out of China. What's happening is they're no longer repatriating that money because they don't believe in creating new liabilities for the Chinese banking sector to lever up into a property bubble. The folks the smart money in China understands what's going on here, and they're leaving their money in U.S. dollars and or in other foreign currencies abroad. That's what we're seeing exactly here, and that's why we've seen such a rift emerge in the PBOC's balance sheet relative to the foreign exchange reserves on the PBOC's balance sheet. So this, in our opinion, means that if China's going to continue stepping on the gas from the perspective of liquidity provision, what's going to continue happening is the renminbi is going to continue to decline and depreciate, and that is disinflationary for the global economy. So that's another positive thing.